Kim Anderson, our grain marketing specialist, joins us now. And Kim, we've been talking about the rain, and certainly a welcome sight for wheat farmers.
Oh, definitely a good sight. You know, from last fall, we went from extreme droughts all the way down to adequate moisture in a good part of the hard red winter wheat area. That came out of dormancy with that moisture and temperature, and the quality and condition has really improved.
And you have a little moniker you like to say about rain?
Oh yeah, rain makes grain, and I think that's the case, and it will be the case in this instance unless we have a freeze. And if you look at those average freeze dates, you know, April 1 to April 15 over most of Oklahoma, you go out to the Panhandle area, then it's April 15 to April 30, and that's the average, which means 50% of the time, or 50% after those dates, it's going to freeze.
And there's some other things to think about that are not necessarily as positive as the rain. You still have to keep it all in perspective.
That's exactly correct. You know, we've got high stocks, and we're looking at increasing stocks next year. And of course, the rain and the expectation of higher production, and if we get the higher production, then we will have the higher stocks and we will have lower prices.
And let's talk about prices. We've kind of been on a break for a few weeks. What's the picture look like now that we're rounding out March?
Well, now that we've had the warmer temperatures, now that the crop conditions have improved, now that we have the moisture, prices have been going down. You look again, go back to the 1st of November, the Kansas City Board of Trade July wheat contracts been between it's been between $6.50 and $7.50. It's been in the upper side of that. With the rain over this last week, it's down around $6.75, $6.70. It's getting down close to that $6.50 lower limit.
Okay, let's talk about the supply picture now. What's that look like?
Well, it's with wheat, we've got, let's say, 850 million bushels in these stocks. That's well above average. We're looking at maybe going up to 950 next year. So in the United States, we got more than adequate stocks, and it's the same in the world situation. And you've got to bring in corn that's got tight stocks. And so one of the things of the stocks issue is they're feeding wheat, and I anticipate that as we get into the wheat harvest, the feedlots and feed mills are going to be buying a lot of wheat that's going to be less expensive than the corn and put it in our feed rations.
And can you talk a little bit more about the international picture right now and some of the influences?
Oh yeah, there's some problems in the world situation. You know, we had the dry conditions in Eastern Europe, Ukraine, Russia, freeze in all of Europe. They're looking at maybe some excess freeze damage in Eastern Europe as well as Western Europe and in the Ukraine, and so you're going to have lower production there. Talking about lower production in northern China. So it's possible next year that we don't see any increase or very little increase in world stocks.
Okay. Taking all this into consideration, your advice for producers right now?
Well, I think they need to price some of their insured wheat. In other words, if they got crop insurance that's going to guarantee or cover if they don't get the production, I think prices are going to go lower. If on that July contract they go below $6.50, then I think the next target's $6. Remember, I've been since last August been talking about $5.75 in central Oklahoma cash price, and we're getting closer to that. And if it doesn't freeze, I think we're going to be relatively close.
Okay, thank goodness for the rain, right?
You bet.
Rain makes grain. Kim Anderson, thanks a lot. We'll see you next week.